Thank you. Good afternoon. Good evening, family. I am Ajee Jones. I am here to break down every detail about understanding your credit score. I am so excited to be here tonight and just happy to share with you guys today. It's been a blessing to be a blessing. I'm so happy that I was able to help Pastor with his credit and get his score up. And so I'm just excited to share you guys this information that I have for you and knowledge. So we're going to jump right into it. We're going into understanding your credit score. Like I said, my name is Ajee Jones. I went to Michigan State University, graduated there, continued my education at Wayne State. Now the business owner of Real Financial Solutions, where I help people with budget, credit, financial, anything financial. I'm also a certified financial coach and the founder of Real Money Moves, where I teach financial literacy to our community and our young adults. So like I said, I'm just excited to be here with guys today. If you want to connect with me on any way, I'm very much easy to get in contact with, and we'll go from there. So I had an icebreaker today, and I want to get some feedback just to get things started. I had a question, really general, and then I wanted you guys to give me your answer now and then think about it after our presentation. And if it changed, let me know. If it didn't, also let me know. So would you rather have a 800 FICO score versus $50,000 cash? I would say put a 1 in the chat for the 800 or versus two $50,000 cash. Let me know when we get feedback and we can go from there. We got some ones, so we got 800 credit score. Anybody want $50,000 cash? If not, we can move on. We good? All right. So, we got a 2 too. So we got a 1 and a 2. So like I said, let's keep that in mind. And then at the end of the presentation, we're going to come back and you guys can let me know if your answer changed. So we're jumping right into it. So understanding your FICO score. Most people hear credit score not understanding that that is what FICO score is. So what is the FICO? What does FICO stand for? Fair Isaac Corporation. So this firm is in charge of your financial life. I like to look at the credit score as your GPA. I know when we all go to school or go to college, further our education, we want to keep that 3.5, 3.8, right? We don't want to fall below, those 2.0, right? So a FICO score is simply just your reputation and your grade average of your financial history. When you have a high FICO score, you get the best interest rates, you get the best deals. When you have a low FICO score, you end up paying more interest and on your loans and everything that you pay for in your daily life. So like Pastor said, we are manifesting dream cars, dream houses, and we are going to get those, and we're going to get them at the best interest rate. So you can check your FICO score today at www.myfico.com. You also can go to my annual reports, and you can download a free credit report each year. Like I said, you use the FICO score for car loans, mortgages, credit cards, all those good things. You have 3 different scores. So we have 3 different credit bureaus: TransUnion, Equifax, and Experian. Now, most people get this mixed up. We all think that it's one score. It's completely legal and it's completely normal to have 3 different scores. Your FICO score is your median score between those 3. So don't be alarmed if you look and say, hey, my TransUnion is up to like a 660, my Equifax is like at a 620, and my Experian is like at a 615. Don't be alarmed. It's completely normal. Like I said, with your FICO score, it's just your median score between those 3 bureaus. Also, so we're going to learn the difference between a FICO score and a Vantage score. Right? Currently, we use the FICO score with how we approve people, but the Vantage score actually in 2023 they're looking to kind of change that. It's going to be like the Vantage score .10 that they're going to start using. It's a little bit different. So 67% of Americans use the FICO score, 61% of Americans use the Vantage score. To me, FICO, you get a little bit more benefits, and we get pushed up a little bit more for doing the same thing. As you can see, the difference is the FICO is from a 300. They go to the same range, so 300 to 850. I just wanted you guys to see both of them so you can know what to compare to, because sometimes when you're getting approved, they will look at your Vantage score besides your FICO score. So if someone tells you like, hey, we pulled your Vantage score, and you're like, what is that? I want you guys to have complete knowledge over that. So that's what I just wanted to show the difference in between. But today we're going to focus on the FICO, since that is majority used of what we're getting approved for. So like I said, the FICO score ranges from 300 to 850. Anything between a 300 to a 580 means you're a high financial risk. So most of the time you're going to have a hard time finding businesses or banks that will work with you. And your goal score in the range that you want to get up to is around like a 760 to 850 range. The good news is, you know, it's very hard to get a perfect score, right? It's very hard to get that 850, right? But it's good news that if you're around that 760, 770 range, you can still get approved for the same interest rates as someone within the 800s. So like I said, our focus should be 760 and above. I also have a breakdown on the slides regarding what's some good scores: fair, very good, good, and best, and what's poor. Okay, so what makes up our FICO score? We have 35% for payment history. We have 30% with amounts that you owe, 10% with new credit, 15% of the lift of credit history, and then 10% with the types of credit that you currently hold. We're going to break those down. So payment history, 35%, the biggest component of our FICO score. What makes this up? So your payment history shows how responsible you are in paying your debts on time to your financial institutions that you owe. Late payments, missed payments, they will affect your score. They can affect your score up to 50 to 100 points. Late payments are marked on your credit report after 30 days. So I always tell all of my clients, if you know you're going to be behind on a bill, you can contact the institution or the banks and let them know. And you want it as long as you get that payment in before that 30-day mark. Because once that 30-day hit, after that your payment is due, then you will be hit with a late payment. Late payments stay on your report for 2 years. They count as a hard inquiry. So that can affect, like I said, that takes a tremendous hit to your score. We do not want to lose 50 to 100 points just by simply missing a payment when we could have communicated up front and we could have got it handled. So we have to stay on top of that. Second biggest factor is your credit utilization. So that's the total amount that you owe between all of your credit cards. So a good tip that I like to keep is you want to stay below 30% of your utilization. Ideally, you want to stay below 10%. That makes up great credit. That makes the difference between good credit and great credit, right? Your account balances might show different. They might report different on your report, but you want to make sure that you know how much you owe, because sometimes it will show different, and then you can dispute that, and you can also get that off of your credit report. So you always want to make sure that you're keeping up with how much you owe and if they're staying current. So just for example, if you have 3 credit cards, they're all worth $1,000 together. Your utilization should be under 30%, which is $300. But if you want great credit, your utilization should be under 10%, which is $100. And you're probably like, Miss Ajee, why would I only put $100 on a $1,000 card? Because you want to show that the banks that you really don't need their money, right? And you want to show that you're responsible. Hey, if I pay this, if I only charge $100, I pay it off before it's due. They're going to loan you more money, right? That's when you get your credit increases, when they see that, hey, this person is responsible, they pay on time, and I want to throw some more money at them because I want to see how much they're really going to spend. And once you start getting those high limits, that's more money that you can spend, right? When you start getting those $10,000, $20,000, $30,000 limits, and yes, that is completely real and possible, and that's more money that you can use towards everyday life, right? So we want to just be responsible for what we start with, but we also want to be mindful that this is going to take us to the next step. All right, next is the length of credit history. So that is 15%. So the longer that you build your credit score, the higher your score will be. This is compromised of the established accounts that you have. So this is the age of your oldest account, and then the age of your newest account, and then they bring it to a medium once again. They average you out. A good tip I like to tell my clients with this is if you have siblings, you have family, you have people that you can trust, you know that they have good credit. For example, my mother, she has good credit, and she added me as an authorized user. You guys might be asking me, what is an authorized user? That is somebody that you can legally put on your credit, and they can then take on all of your credit history. Now, you have to be very careful with that because you don't want to be an authorized user on the wrong person's credit, right? Because everything that they do will affect you. If they miss a payment, that affects you. If they're behind, that affects you. If they're over that 30% utilization, that affects you. So it could end up harming you more than it can help you. So we always want to just be mindful of who we're asking to be authorized users for, or you even like if you have good credit yourself, you can become authorized. You can bring people on as authorized users and allow them to build their credit as well. I have a daughter, she's 1, and I get a lot of these questions like, well, how soon can I add someone to my credit or my kids or just someone who will be interested, right? So I wanted to give you guys just a minimum age on a couple credit cards that you can be an authorized user on. American Express, we all love American Express. It's amazing. But you have to be 13 years old. When you think about it, that's not that old. Bank of America, they have no age requirement. Barclays, 13. Capital One, which is also a very good card, no age requirement. Chase has no age requirement. We have Discover, you have to be 15 years old. U.S. Bank, 16 years old. Wells Fargo, no age requirement. So when you're thinking about it, you're like, hey, 13 is not that old if someone is adding on American Express. So I always tell this story. I was at State, and I was in like my psychology class, and I had a student, and we were just like, I was purchasing my car. And a new car, and she was like, hey, what's your credit score? And I'm like at like a 750, 760. I'm feeling good. And she's like, oh, okay, well, I'm on my dad's card, and I think I'm at like an 800. And I'm just like, what you mean on your dad's card? And she's like, I'm an authorized user. He added me on his card when I was like 13 years old, and so when I think about it, she had all those years of credit history on her credit report that I did not have. So I was working probably twice as hard for that 750, 760 when her credit was working for itself, because her dad was very much, had the knowledge to know, hey, I can add my daughter as an authorized user and she can reap the benefits of my payment history, credit utilization, and everything that he has built. So just be mindful with that. It's always a great tip. And then we'll move on. So the new credit is worth 10%. So that's the recent credit activity that's documented, or how many inquiries that you have on your report. So inquiries are composed of hard inquiries, which stay on your report for 2 years. Those inquiries come from like loans from cars, student loans, home loans, things that are going to stay. People have to pull hard credits to make sure that you will be approved for the loans that you're applying for, right? Those are good inquiries, so I don't want you guys to get scared and say, hey, I don't want anyone pulling my credit, because it's going to stay on there for 2 years. When you have student loans, home loans, things that you're paying over time, that's good debt. So let's not get too fearful. Yes, it stays on your credit for 2 years, and you also, with hard inquiries, you only want 2 on your credit report at one time. So I just like to remember as 2 years, stays on there for 2 years, but I only want 2 on my report at one time. Then we have soft inquiries, where they only stay on your credit report for 6 months, but you cannot see them. The public eye cannot see them. And that's when you go into, let's just say, Forever 21, and you're like, hey, I want a credit card. And sometimes you want to be very, very careful with these retail cards with Forever 21, H&M. I don't even know all the cards that they offer. But they will pull, and that will report as a hard inquiry, and then now you can't get that off, even if you get denied. You gave them your information, and they pull from that, right? Also, with car loans, you want to be very careful when you go to the dealership and they're running your credit multiple times. I have seen clients come out trying to get a new car and they have ran their credit 12 times. So now we're arguing with the bureaus on how we're going to get this off because the car dealerships did not do what they were supposed to do. So you always just want to be mindful, even before somebody say, hey, I need to run your credit. Hey, I know my score. I pulled it up. This is what I'm working with. Here's the amount that I have for a down payment. Let's cut straight to the chase. We don't have to keep running the credit, right? All right. So then we're going to go to credit mix. This is 10% of your score. This is composed of installment loans and revolving accounts. So like installment loans, like I said, are your home loans, your big loans, car loans, student loans. Your revolving credit account will be your retail cards or your credit cards that you are paying on monthly. The biggest difference, like I said, is installments. You have a fixed payment over time. You have 30 years to pay off your house. You have 15 years to pay off your house. You have 5 years to pay off your car. Those are things that you're paying the same amount on every month, right? You get a fixed rate. Your revolving credit will be credit cards where they're able to change your interest rate if they wanted to. I don't know if you guys been following the news, but the Federal Reserve, they just raised the interest rates on everything overall by like 0.75%. So when you think about that, you might not be, if you think like, hey, that's not affecting me. I don't plan on taking out any loans. I don't plan on getting approved for anything no time soon. But if you look at your credit cards, I want you to continue to monitor them because they can now increase your interest rate. So if you're currently at like a 14% interest rate on a credit card, you might look up and you're like, hey, how did that jump to a 16% interest rate? You always want to be mindful of that and how, because it can change. And then you're responsible. Now we're paying more money. Now you can't make the minimum payment anymore because if you just make the minimum payment, you're never going to pay it off. So you want to stay on top of that, stay in front of it, see how much you need to pay, how much you can afford to pay, and try to knock it out before that interest rates catch up to you. A lot of good cards that I approve of, when you start, they have a period of time, 15 months, 18 months, even some really good cards were 24 months where they give you no interest, right, on the purchases that you put on the card. Pay attention to that as well because that makes a difference. If one card offers 24 months and another card offers 12 months, you're going to want to go for that 24 months of no interest because now you have a complete whole year of putting stuff on that card and you're only paying for what you spend. You're not responsible for any interest. So that is called an APR rate. So when you get those statements, always look for APR rate and then you can calculate how much you will be paying in interest. All right, so I know we're all like in this housing market is kind of crazy right now, so I just want to, and credit is a big factor of the housing market. I have a lot of clients who are like, hey, I need a house, I need it now before these interest rates skyrocket, because they've been skyrocketing over this past year. Even they have doubled since the beginning of the year. So we just want to stay ahead of that. So I just wanted to go over the FHA loan and how your credit score, what's the credit score requirements for that versus the conventional loan. So the FHA loan, you have to have a 580 and above. You can get qualified for a 3.5 interest rate. Now, the difference between a FHA and a conventional is FHA requires you to have mortgage insurance premium. So basically that is broken up into two parts where you're responsible to pay a single upfront premium and you're responsible to pay your monthly payment. So your down payment will usually be more with the FHA loan versus a conventional. So even though you're getting a better rate, you still might come out of less money over time with a conventional loan. With a conventional loan, your minimum score is 620 to qualify. You really want a 640 and above. Right now, currently, the interest rate I want to say I put 6%, but it's like 5.99. Same thing, but that's the current interest rate. But you can get approved for as low as 3%. And then with that, you only need private mortgage insurance. So you can go through another company. You won't be responsible to pay that single upfront cost plus your monthly payment. You'll just be responsible to pay your monthly payment. So that is really the benefit of having good credit, having that 640 and above so you can get approved for the conventional. And just being within the housing market, you usually sellers like to get approved for conventional loans over FHA. But you can play around with that, and you might find somebody who's like, "Hey, I'd rather take an FHA loan." It's all up in the air for a seller, but it pays to have good credit. All right, so let's just break down the difference of interest rates. So I just did a car, for example. We're gonna just go with the new Jeep, fully loaded, right? You go in, you have a 760 score, and then versus the other person they go in, they have a 580 score. You get a 6% interest rate with a 760, a 26% interest rate with a 580. That transpires to $387 with a monthly payment with a 760, and then we're at $600 for a monthly payment with a 580. This is for the same car, the same amount loan. We're just going to do a $20,000. I know Jeeps are more expensive than that, but we're just going to use that 5-year term, right? The total interest you'll pay with the good credit with the 760 is $3,220 versus the total interest paid will be $15,940. That is a huge difference. And when you think about it, we are literally, it's like throwing money in the trash, right? Because you own the exact same car as the other person has, is no benefit, but you just were approved with a low credit score. So now you're going to literally triple your payment on interest over time. So that's why we want to make sure that we're in the 700s when we're going to get approved for these cars, especially now. Cars are super high because they're limited, but we want to make sure we're in the best position possible to get approved and get the best interest rate so we can save our coins over time, because right now we need to hold on to all our money. All right, so I'm just going to go into like leveraging your personal credit for business credit. If I have any business owners out there, like I said, I'm a business owner, and I've been doing this for 4 years coming in August. So business credit is beneficial for businesses. So I just wanted to give you guys just a quick touch on this. So with business credit, you're able to use other people's money, the bank's money, right? Usually when they pull your credit for business credit, you want to make sure your personal credit is at least a 680 or higher. So you can get approved for these lines of credit at qualifying institutions. Sometimes they don't always pull your credit, but it's called a personal guarantee. You always just want to make sure that your credit is in the best position possible. So the business credit is a revolving account. So you will be paying on it monthly. And the business credit score ranges from 0 to 100 points. It's not 850, it's just to 100. The ideal score is at 80 plus, and then your accounts will range from like tier 1 to tier 5 accounts, right? What's the benefit of having business credit? You do not have to use your own money for your business. And, walking into business ownership, at first I was like, hey, I'm going to pay for this, I'm going to pay for that. Before I got my business established, set up my account, got everything legalized. And it's just a tremendous help when you're using other people's money, because you don't want to be going into your own pocket funding your business, because sometimes we have to wait for payments, we have to wait for deals and stuff to go through, and so while we wait, we don't want to have to be, taking that money out of our pocket. So we want to use other people's money. So, but one thing I want to very point out with business credit, you want to make your payments early. You don't want to wait till your due date. If you wait till your due date, you are already behind. You want to make it. I personally say pay it at least 2 weeks before that is due, so it can report by the time that it's due, and you will never miss a payment. Business credit goes down much faster than personal credit when you miss a payment. So that's the biggest tip that I can give on business credit. You have to stay on top of it, whether you're making that minimum payment or even if you want to pay a little bit more. If you get a payout and you're like, hey, I can put this down, I got 500 here, let me put it on now so I don't have to worry about it. You can do that, but you always want to make sure that you're making your minimum payment at least 2 weeks early from when it's due. You also want to establish great payment history. All right, establishing business credits, the things that you will need. You will need to create a business and receive your articles of incorporation by whatever state that you're applying for. In Michigan, you just go to LIRA, michigan.gov. You then want to apply for your EIN number. This is completely free. You go in, you put in your business. It's like an article corporation number. They print you out an EIN number. You save it right there, print it out, keep hold on that forever. Do not misplace that. It's very important. When you go open your business bank account, they're going to ask for an EIN number. That separates you from your business. So if anything happens to one, of course, we don't believe in bad business. We treat our clients and our customers with the utmost respect. But if anything happens, they then will be coming after your business and not your personal life. So you always want to separate the two. Create a business email address and a phone number. Excuse me. And then last thing you want to do is apply for your DUNS number before you start applying for business credit. Your DUNS number is like your FICO score for business credit. That's something that you want to make sure that you have, and you always want to stay on top of it. All right, aligning your credit to invest. So once you understand your credit, you are in a position to acquire wealth. Credit, I always say when I refer to credit, and I just refer back to building a house. It's like your foundation. You have to make sure your credit is right before you start building, budgeting, saving, investing. Credit is always first. And then when you start your business, your LLC, your S Corp, C Corp, you want to make sure your credit is in a good position to receive funding under your business, completely under your business, and so you do not have to use your personal credit to be considered initially. I'm going to skip that. All right, so tips for increasing your credit score. We're going to pay our credit card balances off, or we're going to pay them strategically. We're going to ask for higher credit limits. You're like, when is the right time to ask for a higher credit limit? After 3 to 6 months of consistent payment, on-time payment, no missed payments. I always tell my clients, what's the worst that can happen? All they can say is no, right? You can either go online. For some banks, it's simple as just going online, requesting an increase, and then sometimes you have to call in, so it depends on which bank you bank with. But always ask for higher credit limits, because the sooner we get up there to those higher credit limits, the more we can get approved for, and then the more money that we have to spend. Become an authorized user if you can find someone who is responsible with their credit and pay their bills on time. Pay your bills on time. Dispute your credit report errors. If you don't know how to do it, come to me. Deal with your collection accounts. Make sure you stay on top of it. You can use secure credit cards. That's the easy way to build. With secure cards, you are approved for. You only could spend what you're approved for. So it's kind of like if you say, hey, you're approved for $500, that's your limit. With revolving accounts, you initially get a limit, and then you can spend up into that limit. Where you're approved for much more, we're applying for revolving accounts than more of a secure card. But a secure card is a great way to start. Get credit for your rent and utility bills. You can go on Experian Boost, and they have a portion where now you can report your rent if you pay rent, or your utility bills, cell phone bills, and they report it back to the bureaus for you, and you can get your score boosted up, and you can start getting points for that. So take advantage of that. And add to your credit mix. Don't be afraid to apply for new cards. If you're feeling confident, always be mindful. Always read all the pre-approvals, the fine print. Hey, you will need a 660 in order to get approved for this. I wouldn't recommend going into that. If they say 660, go in with a 690. Always go over and beyond. But don't be afraid to add for credit mix. I see a lot of people I'm just scared to get that card. I don't want to get a credit card. Don't be scared of credit cards, because once you start adding those accounts, that will add to your credit mix, and then your score will eventually go up. All right, key takeaways. We're going to download our free credit report at www.annualcreditreport.com. Like I said, you can get a free report once every year. Sometimes, I know during the pandemic, they were allowing you to get a free report every month, but they now changed that. So you want to make sure you're taking advantage of that and making sure you're keeping report on your score constantly. Get out the now about your own score. Get out your own head. I see a lot of clients are like, don't judge me, da-da-da-da. Doesn't matter. just be responsible, check your score regularly, and make sure you know what's on your report at all times. And then just take the necessary steps to fix it, and then you can learn how to invest today. Like he said, thank you guys for joining us today. My social media should be in the chat, but you can follow us today. My business page is RF Solutions Co. And then my personal page is Ajee J. And I also, like I mentioned, my nonprofit, Real Money Moves _Detroit, where we serve the community and we teach financial literacy. So if you have any questions, any follow-up, or you guys just want to chit-chat with me, reach out to me and I will definitely get back to you guys. Thank you again for having me. If you have any questions, please put them in the chat and we can go over them now.
All right, Ajee, while we're waiting on people to put their questions in the chat, so if you have questions, feel free to put them in the chat. But while we're waiting, can you tell them about some of the services that you offer?
So I offer with Real Financial Solutions. I do credit repair. So I do that. I do budget analysis. I also am a speaker. So I will come in and, I can speak about financial things or just financial coaching and overall getting your finances together, budgeting, saving, investing. And then my other service is Real Money Moves, like I said, where I teach financial literacy to my community. So I do like a lot of workshops, a lot of events where I put on and we go over really much everything: credit score, budget, and investing. I also help people start their small businesses in nonprofit organizations. With nonprofit organizations, I will help you get 501c certified. That's something that I specialize in. And then with a small business, I will help you get all of that together with registering it, getting your EIN number, DUNS number, making sure you have your website, email, all of that good stuff together. And yes, I think I covered everything.